Welcome to Spiedel's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're talking about new proposed regulations and a new form for reporting proceeds from the sale of digital assets. We covered this topic in a recent issue of Spiedel's Federal Tax Letter, and you can get information on this monthly newsletter and subscribe at spiedel.com under Publications. The IRS has issued 282 pages of proposed digital asset reporting regulations, along with the IRS explanation of the provisions. Issues addressed include expansive definitions of brokers and a requirement that proceeds from the sale of digital assets be reported to the IRS starting in 2026 on new Form 1099-DA for transactions occurring on or after January 1st, 2025. The proposed regulations define brokers to include digital asset trading platforms, digital asset payment processors, certain digital wallet providers, and anyone who regularly offers to redeem digital assets that were created or issued by that person. The proposed regulations contain tiebreaker rules for brokers to help them determine how to report a digital asset transaction that can also be classified as a non-digital asset transaction. Specifically, if a transaction could be classified as either a securities transaction or a digital asset transaction, then for transactions starting January 1st, 2025, the broker will report the transaction as a digital asset transaction on Form 1099-DA. And if the transaction could be classified as either a real estate transaction or a digital asset transaction, for example, the acquisition of real estate using digital assets, then the transaction will be reported as a real estate transaction under the existing rules. The proposed regulations take a broad approach when it comes to NFTs and define them as digital assets, even though they may represent assets for which the sale is not subject to reporting under the current IRC Section 6045 rules. The IRS's reasoning for treating NFTs as digital assets is that there's no indication in the Infrastructure Investment and Jobs Act or its legislative history that Congress intended to exclude certain digital assets from IRC Section 6045 reporting. Because NFTs are digital assets that are bought, sold, and traded on digital asset trading platforms similar to other digital assets, the disposition of NFTs may give rise to gain or loss, and the reporting of gross proceeds and basis information is equally useful to taxpayers and the IRS as other digital assets. The proposed regulations do not provide for a de minimis rule. This means that digital asset transactions, no matter how small, will be subject to the new Form 1099-DA reporting rules. Transactions in which a customer receives new digital assets without disposing of something else in exchange, like transactions in which a customer receives new digital assets in a hard fork or an airdrop, would not be reportable under the proposed regulations. This would essentially reverse the IRS's previous position on the taxability of hard forks and airdrops in Revenue Ruling 2019-24. For an update on everything that happened during the year to be prepared for the 2024 filing season, register for Spiedel's Federal Tax Update webinar. Topics covered include electric vehicle credits, Secure 2.0 Act changes going into effect in 2024, the new beneficial ownership reporting requirements, and more. For details and to register, go to spiedel.com and click Webinars. That's all for this week. Join us next time for another installment of Spiedel's Federal Tax Minute.